All right. Good morning, everybody. Green on the screen, we got China ADRs up because of some stimulus out of China. Doesn't look like they put too much effort into it, but we do see Hong Kong up 1.5. And I mean, that's give it recognition where it's due. Behind that, the US markets are trying to come up off the lows with the Dow. Well, with the small caps dragging its feet the most, just barely above the zero at less than a 0.25%. We do have the potential today for the gap close trade that we discussed before. There's always 3 opportunities a month: CPI, PPI, and non-farm payrolls. So today we've got that chance. I gotta say though, throughout 2023, PPI hasn't really offered that much opportunity. So I'm not saying that we can't get it today, just that so far this year, they've really been kind of duds when it comes to this strategy. It doesn't matter though, every CPI day, every PPI day, I'm looking for a chance to do that trade. That's just the way it is. We got a number of Fed speakers today, and we have the 10-year auction today. Got a lot of news coming out of Japan tonight, which will impact us through the overnight hours and into tomorrow. And there's a lot of bricks in the wall of worry. Yesterday, the Fed was coming out, saying really good things about rates and maybe not raising rates anymore. I call it the plunge protection team behavior. When they deem the markets too low and want to give it a little boost to the upside, or if it's too high and they want to knock it down a little bit, they'll go out and speak in ways that encourages the markets to rise. They'll do that by hinting that maybe they won't cut anymore, or if we're too high and they want to kind of knock us down a little bit, they'll come out talking about our need to continue to raise rates, that kind of stuff. It's all in their rhetoric that they use to move the markets. Yesterday, they were really using that to their advantage, trying to hold things up or keep it steady in front of the news that we were getting out of the rest of the world. So here we are again this morning with US rates may need to rise further, when what we were getting out of Lori and on Monday, and then more Fed speakers yesterday, was, I think we're there, and I don't think we need to raise rates anymore. We're very likely just going to call a pause. And that kind of language really started to give the markets a nice boost to be a counterpoint against what we're seeing in the treasury markets and what we're seeing around the world. You can see a little bit of that in the European market wrap, where it talks about safe havens from the Middle East when it comes to US treasuries rising. There's a really big energy company news pending today that might come out too. I'm not quite sure, if it's going to be a buy the rumor, sell the news, or sell the rumor, buy the news. Just there is this really big energy company looking to buy another company, and if that deal goes through, we might see some moves over on the energy side. because it was a holiday week, we won't get the EIA report today. We'll get it tomorrow with the nat gas report. They'll be kind of tucked in together. That's generally what happens when we have a short week. And with the bond market closed on Monday as a holiday, it's considered a short week. So they bumped that report from today into tomorrow. At least they're supposed to. I see the nat gas report. I'm not seeing the EIA report. Yeah, there it is. It's tomorrow. That's what we would expect. And then we're also going to get the minutes from the FOMC meeting today. So this isn't a new meeting. It's just a summary of what they discussed in their last meeting. How many people voted yes for something? How many voted no for it? What was the behind the scenes data? They just write up this report and get it out to people. It can be in market moving. So while it's not a new FOMC meeting by itself, it does have the potential to be impactful. That's why it's marked in red. So just kind of be aware of that. It's 2 o'clock. All right, so far we've had a really nice rally off of that 50-week moving average. Reasonably decent follow through. So we want to measure last week's levels and project those up. You can see that we hit the 50% mark of last week to the downside. It's kind of where we found our low. And then we hit the 50% measure, kind of where we found our peak yesterday before pulling back. It's also the 10-week moving average. So right now that 10-week is our kind of line in the sand that we need to get through. And if we do get through that, then we've got the 20-week up there. We'll make it really big. So we can't miss it. So that's what's in focus. The 10, we still have to get through that. And now we're beneath both of them again. We got the 10 EMA and the 10 SMA. Get through those, we've still got the 20 to deal with. Continue that measured move, we got 44.81. Now that puts us in the middle of this big candle up here. So, you know, it's worth getting your bearings on that. 44.35.5, which lines up pretty close to the 20. And then 100% of that move would be 45.14. We are getting close to a TRB setup, but close doesn't count. You know, we got a long ways to go before we get to that point. It's been a melt up. That's actually a market phrase, right? It's not just a description. It has implications behind it. So if you was to, I don't know, Google it or hit YouTube and, you know, search market melt up, should get a pretty decent article or two. I think Bloomberg's wrote one a couple of times, maybe Seeking Alpha, one of those. It's been described multiple times, and there's more to it than just, you know, some vague description. There's kind of some qualifications to it. We are well above the weekly pivot point. Not much of a surprise. And we had an MDP from yesterday. So while we didn't hit it yesterday, today is where it counts, right? You recognize an MDP from the day before, and it has weight or bearing on today's price, not yesterday's price. If you want to know more about missed daily pivots, just search that. That's the strategy. I don't trade it, but it does provide insight for analysis. MDP, missed daily pivots. It's not my strategy to teach. Let's stick on the higher time frame charts for just a minute. This is the daily. And there's a couple of things of concern here, although PPI is going to kind of wipe some of this out. When you're doing OCR analysis, how each candle closes becomes important and has relevance. So yesterday when we had that really nice run to the upside, that was great. But then when we sell off as far as we did, and we close lower than 50%, that's not so great. It takes away all of the bullish bias that we had from this nice run up here. And it's been a reasonably decent run up, right? Even back here, when we closed here and we opened it way down here, at least we closed in the upper portion. So it keeps that bias alive. Here, this is concerning because now we've got levels that we have to get through just to get back to our equilibrium. So that 44.20, it's not just yesterday's high, it's also that 50% mark from the weekly chart. That's two levels of resistance that are overhead that we have to deal with. And this 50% or yesterday's close is now a critical level that has to hold. So sure, we've already been down below that. We wicked below it. We didn't close below it, and this is a daily chart. So, how we close today will determine whether or not we finally broke this run up or if this run up is still in play. Now, using pure price method, we would need to break the low that we set today. Then we'd have to come up and set yet another lower high and then continue to move to the downside before we would consider that this was a topping pattern. So we don't have any rollover signals. We don't have any reason to short this yet. And as we're going to see in a few minutes, we haven't traveled too far, too fast. We're not overbought. The market doesn't owe us a sell-off, and there's no reason to get puts just because we've made some reasonably decent moves in the last few days. So with PPI on deck, we would expect to see some hedging. The volume's within normal range, and so far, they're not hedging. We're not seeing any behavior in here suggesting that they're concerned or worried. They're not sitting out, and they're not preparing for a big move. There's kind of two sides to that coin. When they get really cocky and they think they have the answers figured out, and they don't hedge or hesitate or approach with caution, I get a little excited because if they get caught off sides, if they're wrong, and well, they've been wrong before, then because they didn't hedge and because they had already heavily picked one side, they're off sides and we see some dramatic moves. That's one side of it. The other side is, what if they're right and there really just is nothing to this PPI report? It's a big nothing burger, and we're just going to continue to do whatever we were going to do today, and that the PPI is just a waste of time. One or the other. But, when we really sum it up, that's about how it is with every economic data point that comes through. that it could be nothing, or it could offer the next piece. So it's just important to realize that the volume is normal, so they're not sitting out, and there's no market maker move, so they're not hedging. This isn't an opinion. I'm not telling you what I think. It's right there. This is the data. If there were hedging, we would see a market maker move. They're not hedging. $10-day, 30-minute volume profile. When we're at the highs, we expect to go to the lows. When we're at the lows, we expect to go to the highs. Hey, look at that. We're at the highs. This level that I've got marked here, 43.92, it's a level that we've talked about before. It's one of those bigger levels, higher levels of importance. Comes from monthly levels, yearly levels. So that one's got some weight behind it. It's not a surprise that we also have a lot of volume there. We are a long ways from the point of control, and we have spent a lot of time there. We can see the TPO kind of building up. It won't surprise me if that's where the new point of control goes, but we've got a lot of work to do before then. If we break that low, there's some shallow areas, and we're very likely going to fall through it really quick. Get back down to that 43.70 and even 43.50. So yesterday we took out that 44.05 VPOC that's been here for a long time. And you can see that it had been there so long, there really wasn't anything left of value to it or of merit. At some point, we changed contracts, that maybe that unfinished business that was there just isn't there anymore. But we left it on until it was tagged. Take it off now. Don't need it anymore. We didn't get one from yesterday to deal with because we're running right through that area all night last night. That's a really tight range. If we consider a narrow IB, initial balance, the initial balance is what they call the open range from 6 to 7 at night. At least that's when the original IB was developed. I think there's a newer one now that comes out at 9:30 that traders use, but the old school classic initial balance was from 6 to 7. And that open range, unlike our own, 9:30 open range that maybe you use a 5-minute or a 15 or a 30. The open range at 6 is always 1 hour. We gauge the size of that open range, the size of that initial balance in that 1 hour time frame to gauge if they've already finished their business for the day or not. All right. So when you're looking at the Globex and you've got a really narrow open from say 6 o'clock to 7 o'clock, and there's really no price action that got taken care of during that time, the suggestion is that there's still a lot of unfinished business to do. If it was a really wide range, then the suggestion is that they've already finished all their business. They don't need to come in and continue to trade now because they already did all their trades there. So that's a really narrow IB. It lasted all night. And if we were still holding into that range this morning, then we would consider that they have a lot of unused ammunition, so to speak, or a lot of trades that haven't been traded yet. But we've already started to expand, either because some PPI data leaked out, or they're front running it, or for some other reason we're starting to pick up and they're ignoring the fact that there's a PPI print coming out. Either way, it's worth noting when you have a very narrow IB, because with the markets and the way that it measures volatility is, and this isn't true, but this is how they see it. When volatility is low, it has nowhere to go but up. Or when volatility is high, it has nowhere to go but down. That's not exactly true, but that's the common approach. So when the IB is really narrow, that implies volatility is really low and that it will pick up, that you will get an expansion. But market compression leads to market expansion. So the longer we stay compressed, sideways, narrow range like that, the bigger the move usually is. Unfortunately, it's not much for direction, right? The purple PP line is from a floor pivot, just your classic old school floor pivot. So this is nothing more than a mathematical calculation. If you were to search online for floor pivots, you'll see a formula that uses open, high, low, and close, or and divided by 4, or you'll find another formula that just uses high, low, close divided by 3. That is what a floor pivot calculates. So then you've got the daily floor pivot using a daily candle's high, low, and close from yesterday, or you've got the weekly pivot point that uses a weekly candle's high, low, and close from the previous week. You can do it on an hour, you can do it on a minute, on whatever candle you want, but that's what a floor pivot calculates, is high, low, close divided by 3. It's just math. In fact, if you go online and you search for floor pivot, the S1, S2, S3, R1, R2, R3 are also just mathematical formulas, taking the original floor pivot and then adding or subtracting or doing some multiplication to it to lay out the S1, R1, S2, R2 levels. It's just math. So the easiest way to define daily without getting screwed up between where you live and other places is that you just go to a weekly chart or a daily chart and you look at that daily candle's high, low, and close. And it eliminates any of that. Well, I live here. What's a day to you? What's a day to me? Just look at what the broker defines as a day, because that is a daily candle and that is the daily high. I don't have to question what time of day that high is or when this day ended. That daily candle is done. It's over with. I can use that data. It eliminates all of that kind of stuff. That's also important when it comes to the close. The ES, for an example, has a close at 4 o'clock. It has a close at 4:15, and it has a close at 5 o'clock. Which one of those closes are we supposed to use? Don't worry about it. Just go to a daily chart, mark that close, and now you've got a close, right? So try to eliminate a lot of the gotcha stuff by just using what the broker gives us. With them not hedging, and with this push that we got before the data, it's kind of tricky to imagine what we're going to get out of this. We're seeing some volume pushing through. Those China ADRs are certainly getting lit up, and the solar is getting some volume this morning. But that doesn't mean much, right? The sizzle is nothing more than a 5-day average, and it can be call sizzle, put sizzle, volume sizzle, volatility sizzle. But that sizzle is a think or swim thing that just means 5-day average. So if we're exceeding the 5-day average, we see a higher sizzle. But if the average was 1,000 shares and we've seen 3,000 shares this morning, it's going to have a really high sizzle, but that's still low volume junk. So, just kind of keep it in perspective that sizzle is just math. Those China ADRs, though, are where we're seeing the flow. They're not up too much yet, but it is right in front of econ. So it's not a surprise that they're not up very much yet. And it is where I would say it's worth keeping an eye on today for some day trading opportunities. These are those China ADRs, BABA, Baidu, PDD, JD, even some of the EV markets like Li, NIO, they still fit into that China ADR list. So, these are bottom fishing plays. For swings, I don't think I would really recommend it, but for day trades, that would be what's getting some flow this morning. Yeah, it's definitely better to mark your own lines starting out, right? So that you at least understand where they come from and how they're derived. And then, along the way, you let the machine do it. Just use those daily and weekly charts so that you don't sit there fighting against which close to use and when do we consider the day done. And so while these are down, it's very likely down as a part of everything else that's down, waiting on the data to come through. We got a little bit of precious metals that are up. But with US dollar Japan back above this monthly level and back above that 148.75, I'd be a little bit concerned. This sure looks bullish. And we don't want to see it making runs back towards that 149, 150 area, right? We don't want to see that kind of behavior out of this because we still don't want that intervention. We kind of got a little bit of a reprieve. When we had the whole market kind of pull back like that. But if we're going to get back up there, then the concern is US dollar Japan's going to come out, run an intervention. That's going to shake up FX markets everywhere. Bonds are looking really good this morning compared to stocks. Sure that the ES is up 0.25%, but bonds are up over 1% this morning. So it's looking pretty good from that point, the fact that it's up that much, but it does look stalled. Looks like it's ready to break down again. And with that breaking down, we're expecting the 10-year to make some moves to the upside. That's going to put weight against the stocks. We'll expect the S&P and the NASDAQ to start making moves to the downside. And oil continues to move to the downside. Take it out to the daily. We are still IX10 from back here, but we've got a gap to close 82.81. So if we don't find support on this IX10 and we break to the downside, we'll be breaking down with a gap to fill from an IX10. Could be a reasonably decent move, pretty fast move. A day that looks kind of like 10-4, October 4. Keep it in perspective though. This is last week's candle. 86.70 is the line in the sand. We continue to fade back down. We're still expected to hold above that 81.5. And the dollar is holding in this zone. The best of all worlds is that we stay in that zone today without really going anywhere and doing too much. That would be the best thing to hope for. with US dollar Japan making moves like it is in the lower right here, and we're not seeing the dollar make moves to the upside, kind of like that. Gives me a little bit more hope that we're actually going to reject off this trend line and fade back down, staying below that 149, right? Because we're really close to 149. So keep an eye on the dollar index. We don't want to see a breakout here. If we do, then 100% of this box would be our first estimate of distance. That gets us above the intraday RTH high of yesterday. Get past that, then we'll focus on all of yesterday's high. It wouldn't even get us back to the high of the week. So at least we have that, right? A 200% increase of this zone wouldn't even put us at last week's price action. We'd still be inside our previous week. Inside of this week, I mean. We got to get above 106, call it 106.50 before we even consider that. So we can see Bitcoin's down about a 0.5%. Nat gas is down 1%. Been kind of waiting on that nat gas breakout for, like most of 2023. Kind of makes sense, that it's going to have to digest some of that move that it made. And the fangs are up 0.5%. So you got a really big TRP setup on Apple. These aren't the kind of TRPs that we want to focus on. This is more of just like a classic old school overhead trend line kind of thing. And it's still a ways off. Apple managed to get through all of those daily moving averages, except the 50. It's kind of tangled up with it right now. Once above those 50s, though, there's nothing left through the moving averages to deal with. Kind of got a straight shot to close this gap. 183. And looking at it on a weekly, the only thing we have left to negotiate with once we get past these 10s is this 20-period moving average 182.70. The last big bar of concern, 181.76. So for today, we don't really have a good setup for a trade here yet. The 50% mark that we want to focus on. Now this kind of fits into what we were talking about a little bit ago with how Apple closed yesterday. So if we focus on yesterday's daily candle, we closed lower than 50%. We closed very likely lower than 25%. And then we also closed lower than the previous day's close. Some of the positives out of that is that we closed higher than the 50% mark of the previous day. So at least we closed in the upper body here. That gives us a little bit of continuity. You know, if we're looking for this to continue, it would have to have closed above this 50%. So the fact that it did, we can at least carry on with that. But this is definitely a topping pattern or a pause in that run. And now we're IX10 today. We're going to be opening IX10 inside of this candle. So 10-9 is still the candle that you want to focus on more than yesterday. The good thing is we kind of got a reasonably decent setup. So Apple's got a market maker move of 1%. If we can rally up from this close, get through the 50%, that crossing through that can be your alert, kind of get you set up and ready for a trade. And then breaking through October 9's high could trigger your entry. Some targets or resistance would be yesterday's high and then measured moves above that. If you're looking for an LRE, you're going to want to get in as close to these lows as possible, either that 178 or the 50% mark, 177.5. But that's if this move is considered still viable. I'd say you kind of want to put the 5-bar rule into play here, right? Even though it's been more than 5 bars, the 5-bar rule kind of implies that, you know, after 5 green days or 5 red days, that the market pauses and that you get opposite candle color. And if you kind of think about these 2 days not being a part of that count, because sure, it was a green day, but it opened and closed lower than the previous day. So start the count from here. 1, 2, 3, 4, 5 yesterday. Today we would expect a sideways day. Now that's almost like seasonality, right? We wouldn't take a trade just because of some 5-bar count, but we add it to the analysis of, is there any reason to believe that today won't be a breakout rally day in Apple? Yeah, maybe today's going to be the day that it takes a rest. All right, Microsoft's also up in the pre-market this morning. Most of the FANGs are, right? That's why the FANGs are up. Right now, because we're up, we're already outside of this really big candle, and that's a good start. If we were doing OCR, we'd still continue to see these higher lows and higher highs, but we would recognize that we had a lower close yesterday. So that's a little bit of a warning signal. And then the 50% mark, whether or not we closed above or below that. And of course we closed above. So the move is still there. It's just a warning. Kind of need to see that follow through today. So 326.74 is the line that it needs to close above. And for a target, 333.50 would be a good start. It's a nice $3.50 move. That's not bad. Now, I've been talking for a while about the end of the year, or what it was going to be like as we approached the end of the year. And my contention has been that we will be closer to the high than to last year's low. Right? Last year's low in SPY around that 360 area. I've been arguing that we're very likely to be closer to the 470s than the 360s. We just needed to get through the first few weeks of October. And sure, some of this is seasonality. If you've seen any seasonality charts right now, it shows, a couple of weeks in October are weakness. Then we turn and we start heading back up and we end the year near those highs. Seasonality is not the reason to put a trade on. It's just kind of a historical perspective of average, right? But so far, this is the turn that we were looking for. It just needs to kind of follow through, whether it's the S&P or the Qs. And judging by how it started last week, it's going to be in the fangs again, just like it was near the first of the year. And that as the move continues, we'll see that rising tide from all the other markets. Earnings are going to start really soon, and banks start the earnings. And generally, they set the tone for the earnings season. So if the banks come out doing really well, speaking really well, it's very likely we'll have, a good earnings season. That'll add to this push. I've got a number of lottery ticket trades that are already, up around those highs in the Qs, in the S&P. The thing about a lottery ticket is it's just like it sounds. It is a low probability trade with a low cost outcome, right? So it doesn't cost you very much, and it has a low expectation of winning, just like a scratch lottery ticket. They're cheap. And when you lose, you just shrug and you don't care because they were really cheap, right? And they have a really low chance that you're actually going to win. But when they win, they, various degrees of payout. That's what a lottery ticket should be. So if you're pricing any trades across those highs for January, December, I like January because you get through all the holiday stuff, right? You don't have the holiday stuff messing with your options. January, February, they should be cheap trades. You don't want to put some, high cost trade on that has a high loss impact, because these don't have any probability to them other than they're lottos right now. You want to actually break through a trend line first to have a reason for a quote trade, not just a lottery ticket. Yeah, elections do affect the markets to a degree. This whole thing with the speaker is unprecedented, so we don't even know how that's going to affect the markets, right? But yeah, those kind of things do affect the markets. Usually it's mentioned in a seasonality chart, which year was an election year, which one wasn't, that sort of thing. It's what you want to look for good seasonality charts. So the grind is on. I guess that's where I was going with that. The grind is on. We are working our way back up. It's very likely not going to be a straight shot. And the trades that you're putting on up there, if you're trying to put on any of them up there, shouldn't be, big loss trades, because if it loses, it's just keep it a small loss, 2 or 3 pennies in an options trade. It's $2 or $3 shrugged. Who cares, right? if we can get candle close even greater than 50% on that, that'd be a good start. And then getting all the way through the top of that candle, that'd be above that 445. I could see some futures puts getting sold along the low end. That would make sense, because at least in the futures, you can get far enough out and still get premium. All right. Sell some puts down there around 4,200. You could probably do them now, but I would want a little more structure first, just so I could size up a little more, right? So above 44.35 on a weekly close would be a start. You start selling some 4,200 puts, and then getting a candle close above that 45.14. Could start looking to sell like some 4,300 puts. It's not worth that in the SPY, right? Trying to sell SPY puts that far away, there just wouldn't be any premium in there. Plus, the amount of buying power reduction that it would take to sell a naked put in SPY at any distance would just be unreasonable. That's what I got for you guys. Keep your eye on the news today, right? It's PPI, those auctions. These auctions today are a part of the big ones. They matter. And then the Fed speakers. And that's it. And just keep your head on straight today. Yesterday, think about that sell-off yesterday and how it just held the line, right? As bad as the news was that sent it moving to the downside, it held the line really fast and swapped over to controlled selling, nice and easy, no fear, no out of control, nothing. That was just very neat, clean, and organized after that first drop. And that's still a gap that needs to be closed if you don't count this dark pool print, right? Otherwise, it got closed last night. I'll see y'all tomorrow.